Sonic just smashed through 7 million weekly transactions, booked $4 billion plus in monthly DEX volume, and yet the token is still chilling around 40 cents. But here's where it gets interesting. A two-phase airdrop, Wintermute dumping bags, and a descending trendline itching to break. Today you'll learn the 3 metrics that scream undervalued, the hidden red flag everyone's ignoring, and the 4 precise price targets that could turn a few $100s into a small fortune. Or evaporate just as fast. Stick around, because midway through I'll hand you a battle-tested DeFi playbook that's already funding my coffee and my crypto bags. Ready? Let's dive in. Sonic Labs might look like the new kid, but the Sonic Ecosystem Post confirms the chain has processed over $17 billion in decentralized exchange volume, maintaining over $4 billion every single month since January. That level of throughput places Sonic in the same conversation as mid-tier L1 heavyweights. Yet its market cap still lags below $1 billion. Volume is the lifeblood of any chain. It feeds protocol fees, incentivizes liquidity pools, and creates sticky network effects. So when whales see sustained flow without glaring token inflation, they perk up. But volume alone doesn't equal value. We need complementary signals, and that brings us to the chain broker market cap total value lock dashboard. Sonic's market cap TVL ratio of about 1.7 is tighter than Polygon's and miles leaner than high-hype chains like Blast or Barachain. Translation: the market hasn't fully priced in Sonic's asset productivity. For long-term investors, low market cap TVL is like buying rental property below replacement cost, a built-in margin of safety. The Sonic Labs airdrop tweet lays out a clever two-phase distribution. 25% immediately liquid, fuel for instant hype, social buzz, and yes, potential selling pressure. 75% wrapped as tradable NFTs vesting over 270 days, with early claim burns penalizing impatient flippers. Why does that matter? First, the NFT wrapper gamifies vesting. Speculators can trade claim keys without dumping Sonic tokens itself, reducing direct sell pressure. Second, burnt allocations for early unlocks tighten supply right when the network's metrics are accelerating. It's a tug-of-war between liquidity and scarcity engineered to keep the chart spicy. If you're farming or planning to farm the drop, remember, liquidity windows around TG or token generation event often set the year's cheapest or most expensive entries. More on timing later. Messari's Q1 snapshot shows Sonic smashing $1 billion TVL, led by blue-chip DeFi names like Aave with 29% and Silo Finance with 23%. TVL, or total value locked, is growth fertilizer. Protocols borrow against it to bootstrap incentives. Meanwhile, Bitimmortal's chart reveals an all-time high 7 million weekly transactions. Proof that activity isn't just whale wash trading. Retail has arrived. Now, zoom out to Artemis net flow data. Over the last 3 months, Sonic pulled in over $419 million, second only to Ethereum. Money votes with its feet. Inflows signal trust in chain security and decentralized app stickiness. Pair that with DeFi Llama's dashboard. $840 million bridge TVL. $498 million stablecoin cap. But only $5 million liquidity on top apps. That's a classic spring-coiled liquidity setup. Minimal depth can turbocharge price moves both directions. Before we pop champagne, we need to address the elephant. On-chain standard shows Wintermute's market-making deal ended May 14th. They've sold down from 12 million to 2.6 million Sonic tokens. Market makers exiting can thin order books and spike volatility. Combine that with limited decentralized apps liquidity, and you get price whiplash. This is where smart traders separate from moon boys. Recognize supply overhangs, map them against vesting cliffs and size positions, so you live to trade another day. We'll bake that caution into our chart game plan next. Pull up the 3-day trading view chart. Price is printing a higher low at 38 cents after tagging the VRVP's high volume node. Overhead, a descending yellow trend line from February's spike caps every rally. Break that, and the bull engine roars. Key technicals. Heikin-Ashi RSI is curling up from oversold, echoing the February breakout that delivered a 2x run. VRVP shows a liquidity gap between 50 cents and 68 cents. Thin air, where candles tend to teleport. Fibonacci confluence. 236 at 52 cents aligns with the trend line. Our early warning siren. 0.5 at 69 cents sits just below round number psychology at 70 cents. TP1 friction zone. The February high is R1 region at 99 cents, the dollar madness magnet. Regions 1618 and 2618 are moonshots if volume replicates January's vertical move. This isn't hopium. It's a ready-made playbook. Oh, the stop-loss. Only if the weekly candle closed below 31 cents. See the red dashed line? That undercuts December support and invalidates the higher low thesis. Now your position sizing rule. Risk max 2% of portfolio. You're here to win the war, not one trade. Quick reality check. Even perfect technical analysis can't fix bad DeFi habits. Chasing pumps, ignoring yield, or forgetting gas costs. That's why I distilled 4 years of profitable mistakes into DeFi Financial Freedom, the ultimate beginner's guide. At $4.99, it's cheaper than a big fat, single failed limit order. Yet it walks you through staking, yield farming, and yes, airdrop hunting step by step. Imagine compounding the gains we've mapped today with real APYs instead of letting coins sit idle. The link's pinned in the top comment. Grab it anytime. Let's turn your curiosity into consistent crypto income. Now, let's look what Sonic's 2025 roadmap teases. USDC listings on more centralized exchanges, account abstraction tooling, a Singapore summit, and institutional capital inflow. Any of these headlines can provide the volume spike needed for a trendline breakout. Watch especially for USDC liquidity. Stablecoin rails invite options desks and OTC desks, deepening order books overnight. On the flip side, if decentralized exchange liquidity stays under $10 million, or if another Wintermute scale wallet starts offloading, expect whipsaws. Set alerts, not hope. So, does Sonic deserve a slot in your high beta portfolio? The chain boasts fundamental momentum, TVL, volume, net inflows, and a cleverly engineered airdrop that could throttle supply just as demand spikes. Yet liquidity holes and market maker exits inject real downside. And what's my personal game plan? Starter position now. Add on trendline break. Trim at TP1 and let runners ride with a ratcheting stop. Simple mechanical. If you found value here, smash the like button. It helps me a lot. Drop a comment. Trendline or deadline. I'll answer every question. Subscribe so you don't miss the follow-up when TP1 flashes or the stop triggers. And if you want to master yield strategies while you wait for price targets, the ebook link is right there in the top pinned comment. Turn knowledge into cash flow. Oh, I've queued up on your screen some great videos on spotting early calls. It dovetails perfectly with today's play. See you there.